Welcome to Trillions. I'm Joel Weber.
And I'm Eric Balchunas.
Eric, we talk about crypto a lot, and a lot of that is about Bitcoin. But one that we haven't come back to, basically since the ETFs launched, is Ether. And Ether, if you have been paying attention, or maybe if you haven't, Ether's having a heck of a year. What's going on?
Yeah, well, when Ether launched 1 year ago, it launched right into a downturn, and it's hard to get assets if your performance is awful right off the bat. Ask any issuer that. So not only did it have to follow Bitcoin, which is tough.
Like most successful ETF launch ever.
Yeah, it really, I mean, the shoes it was trying to fill were just too big. It felt very disappointing. And then it had a rally. There's a couple narrative things that we'll go over that helped get it going. So in the past 3 months, it's doubled. It's up 100%, the coin. So once that got started, people started buying the ETF. And amazingly, these Ether ETFs basically doubled their assets in July alone. Just 1 month double. They've got about 20 billion now. And a great fun fact is that if you remove the Bitcoin ETFs and pretend they didn't exist, BlackRock's Ether ETF would be the fastest ETF to 10 billion in the history of ETFs.
Wow.
It's just, I equate it to having to play with Michael Jordan in the 80s and 90s, like Reggie Miller. Great player. Another era, he probably gets a couple rings, but he happened to play with Jordan. And even with all that, there's still only 13% of the assets the Bitcoin ETFs have. So at least they're doing something, though. You know, we think they should probably get around 20%. So they're on their way to earning that market share that's sort of like silver to gold. It's like they're the silver to Bitcoin's gold.
The Reggie Miller to the Michael Jordan.
They are. And
you're going to get so much comment on that on social. Can't wait.
And, you know, Ether is interesting to me because the pitch for it is totally different than Bitcoin. It's more like we had a note, we referred to it as feeling like a 90s tech stock, like the very early days of this new possible thing that could really change tech and the internet, basically. And we'll see how it pans out. And there's a lot of things to talk about here, but yeah, definitely interesting area of the market having a moment. And the reason we cover it so much is those numbers are ridiculous. So I know people are like, you know, if you're not into it, you're probably like, why do you cover it so much? But I'm like, these numbers are crazy.
All right. To join us on this episode, we've got Matt Hougan, who's the Chief Investment Officer of Bitwise Asset Management. Before he went full crypto, he was an ETF guy, as well as Isabelle Lee, cross-asset reporter with Bloomberg News. This time on Trillions, Ether. Matt, Isabelle, welcome back to Trillions.
We're very excited to be here.
Yeah, 100% excited to join.
Matt, it's been a while since we had you on, and you know that full crypto transformation happened. And I'm curious, a lot has gone up in the crypto world. Why have you not retired already?
Wow, straight at it.
Yeah.
You know, look, I think it's still inning 2 in crypto land. I think we're just getting started. I think if you're listening to the SEC, they're telegraphing that the crypto boom is ahead of us, not behind us. So I'm going to keep building. We'll retire eventually.
Okay, so a lot has happened in the Trump administration 2.0 at the SEC. We've had Bitcoin ETFs approved. We've had these Ethereum ETFs approved, which we talked a little bit about here. What do you see on the ground? How do you distinguish between what's happened with Bitcoin and what's happened with Ether and Ethereum?
Yeah, so Bitcoin, you know, remember the first Bitcoin ETF was filed in 2013. So we had 10 plus years of pent up demand for an asset that was easy to understand. It was digital gold. And so it came to the market and it crushed all records. As you guys talked about, it pulled in $36 trillion in its first year. It was 6 times as large as the second fastest growing ETF of all time. It was massive. Ethereum launched, I would say, too soon, right? It launched 5 or 6 months after the Bitcoin ETF. People were still digesting Bitcoin. As mentioned, it launched into a difficult market for Ether. The underlying asset wasn't performing well. The community was in somewhat disarray. It didn't have an obvious growth use case, but it's now has all of those things. And as a result, we saw $5.4 billion in flows in July. To put that number in context, remember that ETH is 1/5 the size of Bitcoin. So that's akin to saying $27 billion in flows in the Bitcoin ETF from a relative size perspective. It's absolutely massive. And I actually think it's going to accelerate or continue throughout the end of the year.
Where are those flows coming from?
I think they're coming from people who bought the Bitcoin ETF. I think a lot of it's coming from financial advisors and family offices who bought the Bitcoin ETF. And this is not a new story. If you talk to any crypto investor pre-ETF, probably the first asset they bought was Bitcoin. And then 20% of them became Bitcoin maxis, and that's all they wanted to do. And the other 80% eventually moved down to buy Ethereum, maybe 9 to 12 months later. It's actually a story as old as Satoshi. It's been happening in crypto for years. And I think that's what's happening here. So people who bought the Bitcoin ETF now want to diversify. Their only other choice is an Ethereum ETF. It has a good narrative with stablecoins and regulation. Why not add that to the portfolio? I think that's what we see at Bitwise. And I assume that's what other ETF issuers are seeing as well.
Isabelle, I know you've been covering this a lot for Bloomberg News. What else has jumped out to you?
I think what Matt said is really good food for thought, because when Ether ETFs launched in July, we were almost like, I don't want to say we were making fun of how they're not getting inflows, but that's what we were thinking. Man, this is really so paltry compared to the just monster flows we've seen in Bitcoin ETFs. But then,
like, why bother? Almost. That
yes,
was kind of
almost.
the sense.
And then at one point, I think we even saw outflows when you look at them in aggregate because of the BlackRock Ether fund. And then now, it's really interesting how you saw really this influx of cash in July. And to everyone's earlier point, like for instance, as soon as February to July 2nd, we were seeing outflows when it comes to BlackRock's ETHA, the biggest Ether ETFs out of among the 20 related ETFs. But then after that, for the whole month of July, we've just been seeing inflows after inflows. So really, I think it's this perfect storm of regulatory clarity, momentum, and just really corporate companies piling into it. You see a lot of Ether treasury companies popping up.
By the way, one more metaphor. When I would be on these podcasts with these crypto people, I would be like, they'd be like, oh, do you think Ether will be a hit? And I'm like, it's tough. It's like, Bitcoin is the headliner. It's like having to follow the headliner. It's like Sister Hazel having to follow Nirvana, which is if you know 90s rock, that would be, no one would be left in the crowd. And so now when Ether takes and flows, all these Ethereum people tag me and they're like, Sister Hazel? Is it still Sister Hazel? It's a whole thing. They're very proud. Anyway, go ahead.
That's true, because when you explain it to people who have no idea what cryptocurrencies are, like my parents, Bitcoin is easy. It's digital gold. But what is the elevator pitch of Ether?
Well, Matt, what is that pitch?
What is the elevator pitch?
Now it's the rails for stablecoins and tokenization. But actually, that's the big thing. I mean, we do, I think it's 15,000 meetings a year with financial advisors about crypto. After the Bitcoin ETF launched, it was easy to come in and say, Bitcoin is like digital gold. The U.S. has $36 trillion in debt. Don't you want to buy this? If you had to get into, let me explain how the Bitcoin blockchain and the Ethereum blockchain are fundamentally different and how value accrues in the Ethereum, you just forget it. It's impossible. Part of it is it now has that easy story. Ethereum is the rails for stablecoin and tokenization. If you're bullish on that, you're bullish on ETH, and people buy it based on that premise.
How do you feel about Eric's metaphors for Sister Hazel and Reggie? Are you going to use those with potential clients?
Listen, is it the second best, or is there no second best?
I love it. I think it's a different sport. I think that would be the more accurate metaphor. Would be a Michael Jordan, Lionel Messi metaphor, or something, as opposed to Reggie Miller. But I'm also courting the ETH vote on crypto Twitter, so I need that.
You might be doing a more diplomatic version of it than Eric.
Yeah. And also, I referred to Ether as small potatoes, and that I get that a lot too. They're anyway. Listen, I was reading up on Ether. What's interesting to me is Bitcoin came out, and it makes sense. Bitcoin is really for security. It's like built like a tank. Right? It's like just for indestructible money, and there's a scarce amount, 21 million only. But the blockchain, people thought we can do some other things on this, maybe have speed, and in this case, make it so anybody can like program their own smart contracts. So they called it Bitcoin for everything. So when you think about it being the rails for tokenization and stablecoins, can you explain how that works? Try to use a visual if you can, because they call it DeFi, Web3. So it really is a new version of the internet. So is my 90s tech stock, is it kind of like that? Should it be looked at? Because then you have these other blockchains like Solana that are competing with Ether.
That's right.
And so it feels very much like the race for land in the 90s for the internet to me, except crypto versions. And is that a good way to look at it?
Yeah, I think that's a good way to look at it, right? Bitcoin is a tank. It's a way to store wealth. Ethereum is a platform that lets you move wealth. An analogy that I think helps people, you think of the New York Stock Exchange. If you're a company, you list shares on the New York Stock Exchange, and to a degree, it benefits every time someone transacts in those shares. If you want to issue a stable coin, you have to issue it on a blockchain. Ethereum is the blockchain on which the majority of, or the largest share of stablecoins are issued. And then every time it moves on that blockchain, Ethereum accrues a little bit of revenue. So it's sort of like New York Stock Exchange for stablecoins and for tokenization. It's a new financial switching infrastructure.
So real quick, how does it monetize this? Because one of the things that I have sort of been seeing is that people don't want to pay a lot. Like, is it going to sell advertising? I mean, how does it actually make money? So I get that it's a popular public ledger.
Yep.
But how does it turn that into cash? And is that something that the Ether token will be riffing off of? Or do you even need cash flow for this to work?
Yeah, absolutely. It's a cash flow driven asset. So right now, Eric, there's about 120 million Ethereum in existence. That's it. And each year, about 1% new ETH is issued. So let's call it 1.2 million new ETH. Every time you issue a stablecoin or conduct a transaction on Ethereum, you have to pay a fee that's denominated in ETH. And that fee is destroyed. It's removed forever. So that reduces supply. You could think of it a little bit like a share buyback. But the more activity there is, the more that supply-demand dynamic tilts in favor of less supply and more demand. The idea is that if over time, the majority of the world's stocks and bonds and cash move over Ethereum, there'll be so many transactions, so much activity that there'll be a huge amount of value in this ecosystem. There'll be consistent supply pressure and strong demand, and that will push the price up.
I feel like that's exactly what people should stop doing, maybe, or start doing, not trying to think of Ether in terms of Bitcoin, but something completely different. I'm looking at it in terms of Ether treasury, because so many people are asking us, okay, why is it different? Why make an Ether treasury? But I think for Ether treasury, what makes it attractive is that it has yield, and it's more similar to a money market fund rather than again, the digital gold, the scarcity, because Ether obviously isn't scarce. It's not finite. You can keep on making. In fact, we know who the founders are as opposed to Bitcoin. So I feel like it's just completely different. At least that's how I try to explain it very simplistically to sources.
I think that's exactly right. It is completely different. You could even argue that it belongs in different asset classes. People debate whether crypto is an asset class. I could argue that Bitcoin should belong in the commodity space, and ETH is actually a technology service that's driven primarily by revenue. That's not perfect, but it may be closer than assuming that they're the same thing. Just because they're both crypto assets, they're used for very different purposes today.
Let's go over stablecoins, because when people out there think about crypto, sometimes, especially in like New York City, they kind of it's like, oh, it's a Trump thing. I'm not into it. But stablecoins to me are the most progressive technology I've seen in a long time. If you're living in an emerging market under one of these autocratic dictators that just crap on the currency all day long, and the currency has 25% inflation a year or worse, they used to go into dark alleys to try to get dollars because they go to work, make money. They don't want to keep it in their own currency. So they want dollars or Bitcoin. Stable coins are just literally dollars on the blockchain that all you need is an internet connection, right? So I had heard that it's possible stable coins supersede Bitcoin completely, and the dollar keep spreading around the world as the reserve currency versus Bitcoin taking that path and challenging all of the currencies for dominance. What's your take on that?
I think both will happen actually. So I do think the existence of stablecoins will extend the dollar's role as a reserve currency in the world, because you're going to crypto dollarize, to borrow Nick Carter's term, huge parts of the world. Because if you're somebody in one of those countries, you'd rather hold dollars than your local currency. And if you can get it from your cell phone, you absolutely will, particularly if it's in a way that the government can't seize it. And it's more than that. If you're conducting business between two countries with imperfect financial architecture, you can use sort of US quality financial rails with instantaneous settlement at low fees using stablecoins instead of routing through local banks. It is hugely progressive and hugely valuable for the world. So yeah, I think that's the direction of travel. Ultimately, I think Bitcoin gets a seat at the world's reserve currency table in the same way that gold has a small seat at that table as well. I think Bitcoin is a better version of gold and it fills that role. But I do think stablecoins extend the dollar's position as the world's reserve currency. It's one of the ironies of crypto that's going to end up helping the dollar maintain its position for longer than it would have otherwise.
I do think so, because I think it's apples and orange. Like, stablecoins are meant to represent a digital fiat currency, and your faith is on the company backing it. Like Visa, for instance, has been slowly integrating stablecoins into their systems. And I feel like we'll be hearing more and more blue chip companies say that, whereas Bitcoin it's on the blockchain.
A different asset class?
A different asset class,
Yeah.
to Matt's point.
Yeah. So Matt, how do you think about what that stablecoin race is going to look like? Is it a different version of Rails, or is it something else entirely, and we're starting to live in, a multi-dimensional world?
Yeah, I mean, there are probably two races worth talking about. One is, what is the infrastructure on which it moves? Because you can issue stablecoins on ETH, on Solana, on Tron, on XRP, on many different blockchains. So what is the one that people gravitate to? And does that share change over time? I think what we see in the world today is the two leaders are actually Ethereum and Tron, and it's geographically determined, with Tron dominating in Asia and Ethereum in Western markets. It wouldn't surprise me if that's the case going forward, but there'll certainly be competition, and I wouldn't count Solana out. The other one is who will win as the issuer of these stablecoins. Remember, this is an enormously profitable business because stablecoins don't pay interest. So a company like Tether, which is behind the largest stablecoin in the world, USDT, I think made $4.5 billion last quarter, which was more than Goldman Sachs. I may have that precise number wrong, but it's in that order of magnitude. I think you're going to see all the major financial institutions issue stablecoins and compete with crypto native companies like Circle and Coinbase and Tether. And it will be interesting to see. I have my views on who will win, but we'll find out in the next few years.
Is that for the benefit of the world, though, that there are so many stablecoins issued by a lot of different companies? And like the US dollar, there's just one, and that's in the full faith of the US government.
Yeah, these are all private look-through vehicles to that. As long as there's an extremely liquid interchange market, I think it's for the benefit of the world. If you just had one issuer, they'd be likely to abuse their position in a way that competition wouldn't allow. So I like that there will be multiple. I think it'll probably be an oligopoly with a few big providers. But I'm pro-competition. I'm anti-CBDC, which is the sort of government-issued version of a stablecoin. And I think the market will sort itself out.
Well, and just to be clear, you buy the stablecoin, right? The dollar you buy, just like an ETF, gets put into some kind of a collateral basket or reserve that is 1-for-1 to the stablecoin. Because there was that big blow up, right, with Terra Luna, where look, these tokens that these intermediaries put out, screw them, man. They use the token as collateral. It's like, I made this magic token. I'm going to use a collateral. Please tell me they won't do that here. They're going to actually use dollars or treasuries.
They'll use treasuries, yeah.
Thank you.
The Genius Act stablecoin bill that just got signed into law requires it to be short-term treasuries, so backed 1-for-1. The Luna thing was a crazy experiment. We never owned it at Bitwise. And obviously it was going to fail. It it was self-referentially going to fail. So the new stable coins under the Genius Act will be one for one backed by short-term treasuries. I would argue that they'll be safer than traditional bank accounts.
Wow. I mean, imagine that though. Oh, here, you want $1? Here's your digital dollar. I'll take my dollar, do something with it. Maybe I'll buy a nice car, and then I'll again make the ERA coin. That's now what your dollar's based on.
You would call it the Reggie coin.
By the way, this whole idea of these intermediaries who are usually under the age of 30, I have this overall theme that the adults have arrived. Whether it's the ETFs, people like you, the government, SEC, it just feels like, are we maybe beyond the sort of massive scam part of the crypto era? Because I just don't see any of this happening anymore. But man, it happened pretty regularly before. Honestly, the BlackRock ETF, all the ETFs, we've seen there's like a turning point, I think, and then a bunch of other things happened. Does that give you more confidence that it's now mainstream, mature, and safer?
Huge amount of more confidence, right? When you refuse to regulate something, which was essentially what we did in the past, you create the space for these scams and frauds. You get the space for something like Luna, or you create the space for something like FTX. I do think the market is more safe. I think there'll be fewer blowups. And actually, you can see that in the numbers. If you look at Bitcoin's volatility since the ETF launched, it's actually been below about half of the Mag 7 stocks. It's been the lowest it's ever been. Volatility has been squashed. And I think that's because better regulation just removes some of the risk. So it's not just a vibes thing you're pointing out, Eric. It's actually reflected in the data. It's a less risky investment. Still plenty risky. Lots of volatility, still very new and unproven, but fewer of those blowups that have sort of defined the first 15 years of crypto.
We've gone a lot of places so far. I do want to bring us back to Ethereum and ETFs. And Matt, it's been a while since we actually talked to you about ETFs. But since you started there and then went full crypto, when you look back on ETFs, how do you feel about them?
I mean, they're great. They've saved Americans billions of dollars. They've made investing cheaper, more tax efficient. They let my father buy the same investment as sovereign wealth funds that invest in ETFs and hedge funds that invest in ETFs. They've been an enormous democratizing tool. I think the analogy I tie to crypto, which is one I've made before, is people didn't trust ETFs either, right? They were weapons of mass destruction. They were going to destroy the bond market. They were going to collapse American entrepreneurial spirit. And now they're the apple pie of investing. I think the same thing is going to happen to crypto. So I love ETFs. I think they'll be here for a while. They're great financial technology. And I love seeing ETFs and crypto collide.
We had you on maybe 4 or 5 years ago. And I said, because I had that phrase, half crypto, full crypto. And I said, what percent crypto are you? And I think you said 55%. What is that percentage now?
Oh, I'm full crypto. I'm full crypto, Eric.
You're gone. And by the way, you can never come back, right? It's like Hotel California. But I've never seen anybody go into the crypto world, whether it's investment or their career, and come back.
No, we're going to drag all of finance into crypto. It used to be you were an internet company or a physical company. Now it's just a company. Same thing's going to be. There's not going to be crypto finance companies. We're pulling everybody, including JP Morgan, kicking and screaming into the crypto market.
I liked your hedge though, of the ETFs will be with us for a while.
Well, let's go over this because I know because there's all these tokenization people who are predicting everything's token. Reminds me of that everything's computer. Everything's token. Okay, relax. ETFs still record launches, record flows.
Yeah.
And last year was really tough to top, and they're going to top them, and the market's not even up that much. Clearly, it's still red hot here. But this idea that the Ethereum blockchain is going to allow people to just buy these tokens that are based on stocks and ETFs and indexes, and it will render ETFs, it'll be a competitor to ETFs, even the stock exchange. I don't know. I get it for people in emerging markets who don't have access, but do you really think the whole mainstream enchilada of stocks and ETFs and the exchanges are going to be sucked over to Web3 and Ethereum and all this? Are ETFs possibly going to start to plateau this year and then start to decline over the next 15?
Well, I don't think over the next 15. I think it's going to take a while. The direction of travel is ultimately in favor of tokenization. And I think ETFs will sort of dematerialize in the IP of the index being separated from the hands-on asset management, which won't need to be in an ETF wrapper. But this is going to take a long time. This is like you and I calling the end of mutual funds, 15 years ago. Mutual funds still have trillions of dollars of assets. But I don't think it's right that we're at the end of financial innovation. I don't think we got to the ETF and then we're done. It's perfect. I think there is another phase, which is sort of direct asset ownership. I think tokens can unlock that, but the timeline is going to take a while. But I would say if you read Paul Atkins' recent speech on Project Crypto, where he talked about the rise of super apps that allow you to invest across all categories of assets, I think that is pointing the way to an eventual post-ETF future. But we're not peaking this year. ETF assets are going to keep going up for, another 5 to 10 years.
But Joel, Nate Geraci, friend of the show, he has a company called ETF Store. He changed the name.
No.
Yeah. So
Geo Wealth.
Luckily, our podcast,
What is it now?
Our podcast is
Trillions.
called Trillions. Yeah, we can cover anything. We're good to go.
What's his new name? What's the new name?
Nova Diaz. I was like, at least he didn't call it the token store. That would have hurt.
He's going full crypto too. He's going full crypto.
Isabelle?
You're covered with trillions.
We are. We can go.
Trillions isn't
yeah.
a great name.
Although my title, senior ETF analyst.
You have to change it.
Yeah, I'm gonna have to.
You can just be senior.
Just senior citizen.
That's fair.
To Eric's point, the push to tokenize everything, I understand it.
That's
It's
right.
really for faster transaction, reduce costs. But then in my inbox, almost every day, I get a tokenization pitch. And it's been a struggle to weed out which is noise and which are true efforts. I mean, firms like BlackRock and Franklin Templeton, they have been pushing into this space to tokenize funds or really create infrastructure around that. But for others, I'm just not sure if they're just trying to get on with what's hot or whether this is a real, genuine
Yeah. What's
behind
real, Matt? What's real?
I think real is pilot projects and the idea that tokenization will win eventually. A little bit of real is tokenized treasury funds that trade on the weekends. That's finding real use as marketable collateral. But we're very early on tokenization. The whole tokenization market's like $20 billion in assets under management. I unlike stablecoins, which I think will ramp really quickly, tokenization is still going to take a while. There's still some regulatory hard yards to go there. But the pilot project phase is an exciting phase. I would say the hit rate on projects is going to be low at this phase because we haven't defined exactly how it will all work. But you see things like the Canton Network doing interesting work with DTCC. You see BlackRock building on tokenization. But you should think of it as experimentation. We're not main time. This is not game time on tokenization. It's the experiment and learn phase.
Ethereum is one blockchain, but then Solana is another. I went to a Solana event this year. And
I'm interested in Solana too, which has like pending ETFs, right?
Yeah, they got ETFs, and there's a Tron ETF coming out, Avalanche, Cardano, Solana. And the Solana event that I was at was pretty, booming. And so what's going to happen? Is there going to be this race for the prize? Obviously, a basket may make sense for investors, but how many can win?
Yeah, especially since, Ethereum, it took a year after launch to get to a point where it's seeing this, right? So what about how many times can we replicate something like that?
Look, I'm going to talk my book. We created the first crypto index fund. We're trying to turn it into an ETF. I think that will be the second biggest category after Bitcoin.
Shocker.
Yeah, I know. But I mean it because who knows who's going to win. These are all software programs that are optimized in interesting ways to be the most efficient and most scalable. Ethereum has one vision on how to build an efficient blockchain. Solana has a different vision. Other assets have different visions. It's really hard to know who will win. I imagine it'll be, again, an oligopoly. I imagine this will look a lot like the traditional software market, where there's Microsoft and Oracle and Salesforce, and every once in a while, a new company like Slack or Snowflake emerges that enters the big leagues, but mostly it's a handful of big providers that stick around for years. There are network effects in crypto that are important, but I don't think it'll be just one. I'd be surprised if it was just one.
The other thing is, if we're going to do all this business of the blockchain and a smart contract is like the computer telling you who's right and wrong and whether it works, who are you going to call when something goes wrong? I mean, sometimes on Twitter, there something will happen and a couple people will come to the conclusion that centralization has its benefits. You can call somebody, like decentralization. I get it. These big internet companies have too much power. The government has too much power. But, when you're on the free, decentralized platforms, is it a fragile system because of the lack of people you can call when something goes wrong?
Well, this is an ETF show, so let me make an analogy to ETFs. One of the big criticisms early in ETFs is, what if you messed up trading? When you buy a mutual fund at the end of the day, it's push button easy. You get NAV-based execution. You can't muck it up. What if you put in a market order for an ETF and you get blown out on the spread? The reason we tolerated that risk in ETFs is you got a huge number of advantages in order for taking more personal responsibility. Crypto is the same. Money moves instantly. It moves frictionlessly. It moves at maybe 1/100th of the cost, but you have to take on the personal responsibility for doing it right. The short answer to your question is there is no one to call, but the longer answer is maybe we should decouple sort of fraud and accident from the core transaction. Right now, if you go and buy a coffee at Starbucks, part of the fee you're paying on your Visa card is what if you want to reverse that transaction? But no one's reversing their transaction at Starbucks. It's just assigning more personal responsibility. And I think if you think of that ETF example versus mutual funds, that's the same thing as the existing system versus crypto. You take on more personal responsibility and you get huge benefits as a result. Is it perfect? Of course not. Well, some people want the old version, of course, but people should have the choice and it can be much more efficient and better.
I mean, Joel has sent his Frappuccino back when they don't put half and half in it.
Oof.
So
Oof.
I've seen that.
There's
Just
always
saying.
one. There's always one.
I'll just take it Americano, totally black. It can't go wrong. Matt, we always ask a question, which is favorite ETF ticker other than your own. I'm going to modify it slightly. My question for you is favorite crypto-related ETF other than anything yet you're in.
Other than anything, Bitwise issues.
Yeah.
I have to talk about a friend's ETF.
Yeah.
Let me think about that. That's a hard one.
I know what he's going to say.
Do you? What am I going to say?
No, you
I
say
want
it.
to know.
Yeah.
I'm going to type it so Joel can see it, and then
Okay.
I don't know what I'm going to say, to be honest. Our products are better, but I'm glad that BlackRock products exist.
Oh, Eric was wrong.
What did you say, Eric?
I thought you were going to say HODL, which was the Van Eck.
I love I
Is
love
that
Van
too
Eck
silly?
team. It's just niche. When
Yeah.
you're launching an ETF, you need to appeal to a community. That's
Yeah.
a smart way to appeal to a community. We compete in most markets in the ETF space, so there are not many that I'm envious of. But this is the early phase. I want everyone to win. I'm happy with everyone.
If there was an ETF, crypto ETF that's atop your jealousy list, what would that be?
Oh, the BlackRock products
bid.
for sure.
Yeah.
I mean,
Oh my God.
We're 20% cheaper. They're 20 times bigger. That makes no sense to me, but we'll get them eventually.
That's good. He had that in his back pocket.
You might have said that one before.
I know. That thing is a machine.
Yeah. I bet I would say it's mine too. And a fun fact is it's inching closer to GLD in terms of total assets. So I think that's poetic.
It's almost a foregone conclusion.
All right. Matt, Isabelle, thanks for joining us on Trillions.
Thanks for having me.
Thanks for listening to Trillions. Until next time, you can find us on the Bloomberg Terminal, Bloomberg.com, Apple Podcasts, Spotify, or wherever else you like to listen. We'd love to hear from you. Hit us up on social. I'm at Joel Weber Show. He's at Eric Balchunas. Trillions is produced by Magnus Henriksen. Brendan Newman is our executive producer. Sage Bauman is the head of Bloomberg Podcasts.